Recording. Okay. So good morning, everyone. Once again, welcome to the Sunday morning product training call, October 5th. This is the festive season, festive time. Diwali is around the corner. A lot of activities are happening. We just had Navratris, Garbas. So this is high time when you will interact with a lot of people. The social gatherings, get together with friends, and lot of meetings will be happening in on a casual and informal setups, right? So this is another time of the year where you can update your prospect list. Again, don't get me wrong, I'm not saying if you are in a party, you start talking about product and business and all, just to warm up the relation and exchange some thoughts, what they are doing, and gather some idea how many people are dissatisfied with what they are doing, who's looking. So you start getting some idea. And some people, if they are desperate and showing right of intent, interest, nothing wrong in asking for a meeting also to set up a meeting. But this is a good time to build your prospect list. This is a good time to, warm up those connections again. So go out and do activities. Go out and attend these events, garbas and Diwali events, or wherever you are invited. Don't just sit at home. Or you invite your friends and family, right? And have those. It's a good feeling, right? When you go out and hang out, you don't want to be live in isolation. I know a lot of people are already doing it. Just saying, keep that in mind that this can also be a good time to prospect and build our list. Okay, so what I want to share today is one of the things that Akibai shared in Florida and also in New Jersey, that because we are talking on Sunday, so this is we want to have some product discussion here. So I will cover again one more time how he shared the term policies, because a lot of people who were not able to attend the boot camp, they were reaching out to me and saying, can we have some recordings of those events, or can we see what different he mentioned that we missed. So so what I'll do is I'll cover that. Sorry, that morning thing with my throat. So I'll try to do justice. I'll see how much I can deliver. But trust me, the way you hear from our leader, because he has 13 years of field experience and have done thousands and thousands of appointments. So hearing from him and will be definitely a different experience. So I I try, but I cannot repeat the same thing. So I highly recommend every time when you hear that Aki is coming or he's conducting some event, please go and attend. Don't miss those things. Okay, so let's share my screen and go to one of the things. What I'll do is I'll just run a simple illustration in my CoreBridge portal, and then we'll go from and we'll jump into the discussion how he suggests to present. So I'm running a simple illustration. Everyone who is licensed, you must have done this before. You know the drill. What I'm doing is, people who are not licensed, don't worry about it. Your field builder knows this thing. And once you are licensed, you get access to this portal and do the same thing. So I don't see anyone on camera, so I can just pick a the line. So I'm running a term illustration. So this is where you go and select the term product. And let's say I have a client, Sam Smith, and a 45-year-old male with, let's say, preferred rating. Sometimes people have some, prescription medications or things like that. So I prefer to show numbers which are more relatable. Like, don't rush into submit everything with preferred plus, because what happens is most of the time when you show a good number and for any reason if the premium increases, people will not feel very happy because they already have painted a picture that okay, I'm going to pay $70 a month, and all of a sudden you're saying now it's not 70, it's now $85, and then it's just like 50 cent more a day, but still they feel why I'm paying more, and they feel that I am fit, I'm healthy, so I should be paying less. So rather show a little bit less rating and also show them the number for preferred plus that hey, I'm submitting with this, but if everything goes fine, you will be getting the best rating. So at least they know. And when you show a higher number and the premium goes down, they just jump on it right away. That okay, this is good, let's take it. Right. So a lot of time initially it happened with me in the past when I started. Some of the people did not go forward and took the policy just because it increased a little bit of the premium because of the health rating, which is not in my control. They were taking some medications, and I was over smart and I said, let's just submit preferred plus to impress the client with lower numbers. Not a good idea. Okay, so let's keep it preferred and we'll go with that. 45-year male, and let's go with 35-year policy and paying monthly. Discount, nothing, we don't need to add anything, and just have this basic, right? So what so one thing that Aki was stressing enough, and in every meeting you heard him saying so many times, people love to buy, they hate to be sold. Right? Take example of your own when you go out in a store. Do you feel good when somebody is just consistently approaching you and telling buy this, or take this? You don't. We want to go and explore the things and then find something and then ask them questions, okay, how this thing works, and then you feel happy that you get your answer, you see the value and you buy it. So our job also as a professional here is to talk about all the value additions, what they are looking for, not just be in rush to sell something and then be done with, right? So very, very important because idea is we are not a salespeople. We are not, yes, we only make money when a product is sold, but our objective is to educate our folks, educate our prospect, educate our clients, and educate to the level so that understand to make a decision, right? And that would help them rather than make a decision on their behalf. So we don't need to convince anyone. Let them make the decision. Let them take the call on what they want, right? So we need to just show the value. So always emphasize on showing the value. And this is exactly what we're going to do in this illustration. Now, illustration, especially term illustration, is very, very straightforward. And a lot of time I used to do that in past also, that, running the illustration and directly going into this page where you have the numbers, like this section. And I used to just copy paste or screenshot this and send it to my clients. Now, because they just said, okay, show me a term plan for $1 million or how much it cost, and just send me the number. And I used to do that. And a lot of time it's not turning out, it's not working because they are not, or some people who are desperate, they say, yeah, I'll take it. But most of the time it is hard to sell just by sending this illustration. So one of the strong suggestion that Akiva said is always send the full illustration, the way it is generated from the system. So this is what you see here is full illustration because it has all the pages, all the information that they need to know. So first thing is never shortcut, never send just the numbers, run the full illustration. Now, how do you present this illustration? Also, when you are So this is another thing that, since I'm running Corebridge, it doesn't mean that Corebridge is the only good company that we work with. We have North American, we have Nationwide, we have Allianz, we have Lincoln Financial. There are so many companies that we represent. Now, based on my client, if I know that, you know, and please hold on to question. I will take, just write it down. We'll, will will have enough time. I'll make sure we'll have enough time for
Yeah.
questions, and we'll definitely take all the questions. I will be here. I have a lot
Anuj
of
bhai,
time.
just a little bit, could you please increase the font size?
Yeah, that I will. That's for sure.
Thank you.
What I'll do is, yeah, while I'm talking. So that's what happened. I lose my thoughts. So, so what happens is we work with a lot of companies. So don't think that this is the only best product, because sometimes what happens is, let's say one of your field builder showed you a product, and based on his experience, he feels or she feels that this is a good product. And then in some of the trainings, you saw other products, somebody else presented another product. And all of a sudden you're thinking, oh, this looks like a better product. I should have applied for that. Why I bought this one? So for understand the whole thing in your situation, what was pitched and what was suggested for clients also, what product we are pitching, and having based on our experience, which one works better. So in my experience, Corebridge I like for living benefits. It's one of the, companies, both North American and Corebridge have great, advantages. But again, we'll see. Okay, so once you run this illustration, and let me open platform 1 second. And just bear with me one more minute. Yeah, so one of the things that Aki highly recommend is get involve your client also in the process when you are working with your client. So what he suggests is, let's start from here, that we are working with this world-class company. And if you see that in, choose the, I just, okay. So if you read this in last 12 months, how much premium they have collected? $29.7 billion, almost $30 billion. So his suggestion is, let your client read these things. Ask your client, Mr. Client, what is this number? 29.7 billion. This is the amount of premium that Corebridge or AIG, American General, has collected in last 12 months as a premium, just in premiums. Now think of this, how big the company is. And most of these plans are commitment for 20, 30 years. So look what kind of commitments they have in their book of business for next 20 to 30 years. So that gave your or your client a confidence that this is a very good company that they're looking at. One interesting fact that Aki shared while he was talking about this is a pretty big number, $29.7 billion. And just for one company, likewise, we represent at least 8 to 10 companies, and there are so many other companies out there in the market. Everyone is doing good. So it's a $1 trillion industry almost, right? But the fun fact is that no one wants to buy a life insurance. When people get up in the morning, they're not like, okay, let's buy a life insurance policy today. No one is excited for that. And no one wants to be a salesperson or a sales agent for an insurance product like life insurance. But still, this is the biggest industry out there, right? So don't hesitate. People will talk when you open this discussion. They will reflect to it, and they will see the potential, right? Why they need this plan. The other important point that he was mentioning to ask your client to read is, what is this number and what it says? In claims and benefits paid for the last 12 months, ending December 2024, $22.1 billion. Because a lot of time we get this question from our client that do they really pay the claim if the person pass away, if something happens, will they pay? Now you can talk all day long, yes, they pay, it's a big company, and but what if you show this number right there with this, and this is an official illustration from AIG, from Corebridge, so they cannot lie on it, right? So on this, they are saying just 1 year they paid this much. Likewise, all other companies. So what that tells is, yes, they pay, and that's a huge number, right? And AIG is 160-year-old company. So they have gone through all the recession, depression, and financial meltdowns and everything. So it's still solid there, right? So that builds a lot of belief for your client. So again, you're not jumping right away into the numbers. First, we are showing the value. Why this company I'm showing to you? What is the background of this company? 160-year-old company. The second most important thing that we highlight to the client is that all these companies are rated by the independent crediting bureaus. Just like when you apply for a mortgage, right? Your mortgage broker asks you for your social security number so that they can run a credit report on your behalf. What that means? From what are the three crediting agencies? Experian, Equifax, TransUnion. They want to make sure you have enough history, you are enough, capable of paying this money back. And one of the ways for them to find that out is by running your credit report, right? That you are not default on other loans and all those things. Same way for all these insurance company, these top four crediting bureaus, Standard and Poor's, Moody's, AM Best, and Fitch, they run their ratings and they run their audits and then provide the ratings to these companies and see what rating this company has. A plus strong, A2 good, excellent, strong. What that tells is this is absolutely great company to work with. I can confidently, give this product to you. And then on top of that, I personally add that I personally have my policies from this company also because I trust in them. This is a great company. Correct. So again, we are in a training mode, so it will not, it is taking more time when we are talking and explaining everything. But actually, when you are in a meeting with client, it will not take that much time. Within minute or two, you can explain these things and let them read some of this important aspect. Now from here, we'll jump on right on to the page number 5, which is nothing but, let's go here, which is right here. So it is actually page 9 of this. Now here, we ask our clients that, actually this one right here. And if you are doing on a Zoom, you can highlight also like this, that Mr. Klein, what do you see here? The critical illness accelerated death benefit rider. And then he suggests that let your client read this line. The QOL Select Choice Critical Illness Accelerated Death Rider provides access to your policy's death benefit if you have one of the qualifying critical illness or condition as specific below. And what are the qualifying conditions? And again, asking client to read it. Major heart attack, coronary artery bypass, stroke, cancer, blood cancers, leukemia, major organ transplant, renal failures, paralysis, coma, Syrian 1. All these things are covered. If you if you ever get into this situation, these things will cover from your policy. And then ask question again. See these things, write it down if you have not written it before, or just again also. Because here you ask your client, do you know anyone in your circle, or what do you see? What are the most common issues that we see day in and day out in our demographic? Out of these, immediately you get an answer. Oh yeah, this cancer is now everywhere. or heart attacks. Even young, I heard this, and then they start sharing some of these stories. Oh, one of my friends, he was working and had a heart attack. Like recently, one of the person, like last month, I know there's a cricket field near our home, and this guy was playing cricket, and he was actually bowling, and right there on the pitch, he collapsed and passed away. Very young, like 38 or something. I don't know what was the issue, like dehydration or what, or heart attack, but that happened. So here, what you're relating is that these things are very common that can happen to anyone, and this plan covers them in case if any of such thing happens, right? So if you have a qualifying critical illness, you can file a claim and accelerate all or portion of your policy, then death benefits. Your benefit will be paid in form of lump sum payments. So when they read it, it means, oh, it is not just a death benefit policy, but it has something which can pay in case I have a critical illness. Then you talk about the second condition. Again, we are when we do in a training mode, it takes more time. But when you are with the client, it will not take that much time. And then say, hey, Mr. Client, the second thing which is very common is all chronic illness, which also covered. Now, what is chronic illness? So you say you must certified by a license, and it says somewhere here. Uh, yes, these are. If you are unable to perform two of the six daily activities, bathing, dressing, toileting, transpiring, continence, and eating. Right? Again, need to know if you are hearing first time this terminology, make sure you know what these means. Most of them pretty straightforward: bathing, dressing, toileting, transpiring. Continence, if they ask what continence means, so it's pretty, you need to know. Like it's like people at certain age, they lose the ability to hold their urine or stool, right? So they pass on in the bed, or they need to wear diapers, things like that. So they cannot hold it. So those things. So that can also be a qualifying condition for chronic illness and for a period of 90 days. So explain this, that what this is. And even in this situation, if you are in a situation like this without any help, you cannot do two of the six things, you will be covered. Company will be paying you upfront money based on the condition. Now, again, do you know in your circle that anyone has gone through some situations like that where they are bedridden or not able to perform some of these things? And yeah, I know one of parent, and he's sister living and all. So you will hear something. So we are trying to relate again to the real scenario. And then the last one is the terminal illness, which is very, very major. Like someone, you can ask, a qualifying terminal condition is an illness or physical condition that is certified by the physician to be reasonably expected to be ensured death within 24 months. Now, this 24 month is not always 24 months, it is state basis. For some states, it's 12 months. For some states, it's 24 months. Like I think we were running in New Jersey, it was 12 months. In Florida, it is 12 months. So before you blindly say it's 24 months, make sure you also read and then quote that thing. What that means, if doctor says that life expectancy only left for you is this much period, then you can submit a claim and receive the money upfront. A big portion, or in some cases, 100% of the death benefit will be paid out upfront, so you can take care of the situation. Right? Now, once you talk about these three things, it is like now client started thinking this is a super important thing, not just for me, but for my spouse also, for my wife, for my husband, whoever I'm talking to. Because what if, because sometimes this is very common in our demographic that if only one person is working, like mostly the husband, right? If they are the main source of income, they only take policy for them. They think, yeah, I don't care, yes, it's a big loss if I lose my wife, but since I'm working, I can still take care of the things. Hey, that's great, I totally respect that, but at the same time, what if any situation happen with respect to health? What we just discussed, these three conditions. Who is financially responsible for paying the bills or for taking care of this stuff? So still it is going to be the family responsibility. What if we have a plan like this that can take care of these situations? So now at the same time, we are also involving the spouse and we are making sure they understand the importance of these things, right? Now you can go and talk about the numbers. You're getting the flow, right? We talked about the company first, the rating of the company, the strength of the company. Then we showed them the real benefit because this is where you stand out as compared to other plain vanilla policies out there from Costco or from farmers or the regular other companies, right? Very few company offers these three, illness, like accelerated, critical, chronic, and terminal illness. Not everyone. Some policies offer only terminal for 50%. So we need to know when we are talking, client says, oh, I already have a policy. That's great. I offer free reviews. Just want to make sure you're not overpaying for the coverage. Or you are also covered with this important, living benefits. What do you mean? Let me see your packet, let me review it, and I'll confirm. So it is very, I personally converted a lot of policies that did not have these riders. So don't just settle down if they say I already have policy. You need to talk and ask more questions. Now let's talk about this. That how do you talk about this thing, right? Just, just 1 second. The screen was good. Okay. So now let's we come here. So in this case, this person who is Mr. Sam Smith, age 45, at a preferred rating for now. This is where another important thing that Aki said always, keep small number small, big number big. What that means is when you are delivering a message, you have to say some of those things in the way which feels like a lot or very less, right? So how do you say that when you are mentioning about death benefit? So Mr. Client, this policy is providing you a coverage of $1 million. Now, 1 million sounds a lot. At a very nominal price of little over $7 a day. Little over $7 a day. I think this one comes out to be 7.5 or almost $8, right? Little less than $8. Or you can say less than $8 a day, you are covered for $1 million coverage in this plan, which will provide you not only the death benefit, but also all the living benefits that we talked about. And not just that, your premiums will remain same for next 35 years. You see, the same premium. Doesn't matter if anything changes with respect to health, it will cover you same amount, same premiums for the next 35 years. Now, always immediately relate with the age. So 40, if you are currently 45, so if you add 35 years in 45, it is covering you all the way till age 80. Right? Now, this is where a lot of time people sell it for 20 years, 25 years, because this is a major, thought process that a lot of people have that, I just need coverage till I'm 65. Because then my responsibilities are done and I don't need to worry about anything. My kids will be already out of my home, house paid up. Why do I need an insurance after that? Right? But that's where we need to show the value. Have we just talked about some of those things? Now, looking at our community, our demographic, what do you see? When, what are the chances of happening some of those things, critical chronic illness or death, is between now and 65 or between 65 and 80? Or if you're running till 70, between 70 and 80. So based on the client, what age he's covered at, with the current policy, like if he has a policy that is covering him till 67, then you can say, what are the chances of something happen between 67 and 80? You know our demographic, we know the life expectancy, we know things started to fall apart after certain age, 67, 70, right? And in that case, instead of we breaking into our own assets, what if this plan takes care of it, right? So that something that we all need to emphasize enough. Make sure all our clients are covered till 80. Now you say, what if, and I also highlight this point that not many company offers coverage up to 35 years. A lot of companies offer 30 years, but not many. So what if you have buy a plan from a company which offers 30 years will take you till 75. But if you go with this plan, 35 years till age 80, now what are the chances things go wrong between 75 and 80? Very, very high. So, by paying this much premium, we are pretty sure that, if things go wrong during that time, you have a coverage that stays there. Right. So you mentioned that. Now, this is also an opportunity to convert some of the policies that we have done in the past. So go back and look at your book of business and see how many policies, term policy we have done in the past until how many years they are covered. So go back to the same client and start this discussion. Hey, I just realized that, these plans are super cheap, and because of the things are changing, in future the premiums may go high, companies may revise their premiums. While the timing is right, while you're healthy, while you're insurable, why don't you cover you till 80? Because just by paying $6, $7 a day, you can easily have this plan forever for till 80. So that will, so you will be getting same client, business again. And in term policies, once the plan is paid for the first year, your commission is already complete. Again, I'm not saying for the sake of commissions we do that, but it's a repeat business for you. If they do the policy again and update it, you will be earning commission again. So, but at the same time, it is a big help to the client. A lot of time we might, because of innocence, we were not, educated enough that what is the importance of covering clients till age 80. Like I personally revised my policy also because after coming from Florida, I went because mine was not till 80. So I said, okay, let me add and get the till age 80. Because it may sound like, oh, this much premium, but trust me, and I asked my client also, like at age 75, you tell me if you have to buy a long-term care plan or disability insurance for $1 million, how much you have to pay? Do you expect to pay 2,700, 2080 or 2,780? Or again, small number, small. See, I made the mistake. Small number. Can you say that by paying little less than $8, you can buy $1 million long-term care plan at age 75, where you might not be insurable? So we are highlighting on one more point there, right? We want to make sure they understand the importance of getting all the way till 80. Very, very important. If they are young, very good. Get to the maximum coverage till by using 35 years. And when the time comes, update the policy. Right? So far so good. Then and then while you're doing this, one more time, you can always go back. See, these are the things I was talking about. These are also up to $1 million you are covered. Maximum you can go up to $2 million for these coverage. So if you feel really the importance that this is super important, let's run numbers for 2 million also. Some people who can afford to pay $2 million, why not? Right? Like one of the example that Aki gave is, Prashant. We all know Prashant, one of the leaders in other hierarchy. A few months ago, he had to go through an unfortunate situation because of the health reason, genetics. Pretty young guy, but had some of the major arteries clogged and had to go through an open heart surgery, which was a major deal, right? It happened, but everything went fine. Luckily, he came out perfectly good. But he had a $2 million term policy and submitted a claim. And Aki said how much he got, $1.35 million from the term policy, for which he paid around $8,000 by that time. Now think of this, the blessing. I know it's an unfortunate situation, but if you don't have the policy, you can't do much. You can't change the situation that happens. But at least having that policy helped the family financially so much. They don't have to worry about it. They just bought a beautiful home, all paid up. So that's the thing can happen. If you can afford to go, because living benefits cover up to maximum of 2 million. So if you can afford that much, absolutely important, very, very important. Sooner or later, people will be getting into situations. I can go on and on examples that I know personally, people who have gone through these situations, right? So,
Anuj, Anuj,
yeah,
yeah, living benefit as per the Florida camp, he said the max is 1.3 million, right?
no, the max policy, you can have a $10 million policy, but for living benefits, they only consider 2 million to
Okay,
accelerate the benefit.
okay.
Yeah. And that's a good point. A lot of people think, oh, then can I buy a 10 million policy? Yes, you can buy, but they can only use 2 million to accelerate the living benefits, right? So very important tagline that he always use, and then this is also we need to use in our presentations when we are talking to client, that does these things come announced? Do these people know that this is going to happen at this young age? Later age, we understand, but these things don't come announced. So we have to be certain in uncertain time, right? These are some of very strong lines. So if you practice well how to use it, when to use it, it have a lasting impression on clients' mind, right? So that's there, and then always have some examples ready, that because stories always works, right? That yesterday training he said stories tells and facts tells, same thing. Have some example ready that I know this person who been in this situation. Like we know stories about the Shobha, Prashant, and there are. I personally have a client who I helped and got the living benefit approved for him. So without using their name, you can just saying that this is personally my experience. I have helped out a client who was in this situation. So uh, I think I did not miss any point. Let me just go through things. So we covered about that. So most important is make sure everyone has coverage till 80, because that's the maximum that life insurance policy will cover, right? So make sure we do that with living benefits, and first review your own policies. Review your own thing. Do you have? First thing is, do you have a policy? If not, this is the high time. Do not think it's no brainer to have it. So have your policy, then make sure, is it up to 35 years, or if you are over 45, age 45, covering till age 80, right? Make sure you have that. Then see what's the amount. If you can afford, whatever you can afford, million, 2 million, make sure you have it. If the premium is not that much. It may sound like a lot of premium, but the benefits that you get is enormous, right? And third thing is your spouse covered? If insurable, yes, 100% cover them as well. And very, very important. Like, and sometimes I also say, this living benefits, I missed that point. The check that you pay that they get paid is one lump sum money. You don't have to provide any bills or anything. Claim process is very simple. Sometimes client asks about the claim process and all. So it's a very easy process. You can do it online or you can reach out to the agent and you can help them. So I'll stop here because I know people have question and practice this. I can still do much better in the delivery of this thing. This is the first time I'm delivering this training after hearing from Aki. So I still need to have a better flow, right? Or better use of terminology and all. But that's how we learn, right? So please unmute and ask question so that we
Yes.
can.
Anuj, I have a question.
Yes, Pratik bhai.
Can you go to third page on this illustration?
Third means where the benefits were or
Yeah, the third page. Uh,
the terminal.
no, like the third page from the top.
So this is first, second, third. This
Okay.
one.
Yeah. So I have a question right here, right?
Okay.
So these qualifying illnesses, they pay based on the age that we submit a claim, right? Let's say if they had a critical illness at age of 64, 65,
Mm-hmm.
and we are getting a policy at age of 45, but after 20 years they had some kind of critical illness or whatever. So if they decide to get that lump sum, this is what they get based on the age, but then they will be forfeiting the out of 1 million they will be only getting this much, right? They will be forfeiting the rest.
Yes. So, and that's a good point. Very good question. So when you submit a claim, because in my experience, when I submitted for my client,
Hmm.
they sent an offer letter back. They sent an offer
Okay.
that out of that $1 million, we are approving, let's say for in this example, they say we are approving for 600,000,
Right.
right? This is a range, right?
Hmm.
So they say 600,000. So what that means is if client decides to take the full 600,000, they
Hmm.
will get a lump sum check for that and remaining policy is lapsed.
Okay.
Nothing is left. Or
Right.
you can say, I don't need 600, so I'm making a counter offer. Just give me 200,000, keep my policy active. So they again prorate and
Okay.
say, okay, we'll give you 200, and now your benefit is 500,000, let's say.
Right.
So they adjust those numbers and come back with another offer.
And
So,
if we don't ask them for a lump sum, right, for the critical illness, and let's say the client passes away after a year or two, do they get the full benefit?
yes, that's the living the death benefit, right?
All right.
If you never submit a claim for chronic critical illness and the
Mm-hmm.
client pass away, they get the full $1 million.
Okay. Okay. Makes sense.
But if ever get into a situation, just take the money, right? It doesn't make sense
Yeah.
because
To
what
it.
if you outlive, you did not apply for the
Right.
claim and now you outlive
Right.
the time period, then
Makes
you don't
sense.
get anything.
Okay. Okay. That makes sense.
But this is a very good point.
So,
Yeah.
Anuj bhai, Kishore here.
Yes.
Just to add a little bit more on what you explained. For one of my client, he had a similar situation. So he had three policies, 500,000 each. It was laddering. So what he did, when I spoke with AIG, they recommended that they should accelerate as much as they can because one was 10 years, another was 15 years, and the last one was 20 years. So we accelerated 10 years and 15 years, the whole. And the last one, they actually converted into a IUL, the Imperial IUL. So that was a very good idea. Uh, give them an idea that now it is difficult for them to insurability, and it is the right time if they would like to convert into a IUL policy. So I converted that into an IUL policy. They paid around 12,000 per annum policy. So that was a good converted IUL policy as well. So just an idea when these
And
claims
that's
happen.
that's that's exactly the way we do, Kishore, and that's a good
Okay.
point. that once you know that you are receiving this much money or you are in a situation, submit claim for all the policies because this is high time and you need the money. And once you have the money, that you can do partial conversion. So I did the exactly same thing, converted some part of his policy into an IUL and use other remaining lump sum money and open an annuity account for the client. So that way, because he's not insurable now, so he has an IUL which will go forever, and then at the same time he has an income protection with annuity. So a lot of things can be done once you have the money in place. Good thing. Okay, who else? Just unmute and ask.
Anuj bhai, Kanchan here.
Yeah.
So when you talk about the living benefits of 2 million, can you explain more on that? Like a person can have a 10 million policy, term policy, right?
Yeah.
But the benefits will be limited to 2 million. Can you explain more on that?
Yeah.
Like how much benefit they will get on if they are taking 2 million accelerated death benefit?
Yeah. So if you see what I'm highlighting right now on this policy page,
Mhm.
so suggestion and suggestion for everyone, before you start pitching this term or start using this thing, read all the pages. It's a short illustration, 12 pages, and some of are just very like very little text on them. But read all the pages and try to understand the information here. So what they say is you can accelerate up to 100% of the death benefit subject to a limit of lesser of 2 million or lesser amount set forth in the policy. So in sometimes they say for like you approve because of some existing health condition, they can say that your limit for living benefit is only $1 million. So in future, if you apply for a claim, it will be only subject to 1 million. Like in some cases, they can still approve the policy and then say, but we are not adding the living benefits into your policy. So again, based on certain situation, 99% of the time, this is not going to happen. What that means is every policy is have a limit of $2 million, which means no matter how bigger of the policy they have, 3 million, 5 million, 10 million, 50 million, the death benefit is up to that amount, $10 million, let's say. But if they submit a living benefit claim, it will be only the higher limit is $2 million. So when the underwriter calculates, they say out of this 2 million, how much we can pay as a living benefit claim. Did that help?
Yes, yes, Anuj bhai, thank you. So it means if you have 1 million policy, the benefit in that amount, but if it is 2 million or more than 2 million, still the amount will be 2 million only.
Yes, exactly. Good
Thank you.
point. Okay, next.
So Anuj bhai,
Yeah, Venkat.
for term policy, I don't see. Is there a way where we can say run the full illustration, or term policy it's always the full illustration?
Yeah, I think it's always a full illustration in some of the providers that we do. Sometimes, but people I have seen personally, I also used to do that is I just used to send this much, one page. Like I can just print this one, right? Just print this page and send. Because I thought,
Oh, okay.
why sending all this information? So
Okay.
Aki strongly suggested to send the full illustration if you are sending illustration. But first suggestion is have a meeting in person, like over Zoom or in person, and present the way I just did, talking about living benefit, talking about company and all those things, and then send the illustration. Because if you just send the illustration, they will only read the number. They will not even read this section.
And even if we can highlight all those details, that will be more benefited to them. That will be easily visible for them.
Yeah, then you can, and you're right, Kanchan, that you can, if you're sending illustration, you can highlight some of the sections that you want them to read and then mention in the email, I highlighted some of the sections for use, for you, please go through them. So they know that what are important. You can add comments on it. Okay, good point. Anyone else?
But there is no option for selection for running a full illustration for term, right? In AIG.
This is full, right? This is full illustration.
This is full. That's what I'm saying. Okay. The default is full.
Yeah, I don't see any other way. It just say one. I don't think there's any
Okay.
other option
Only cover
also.
pages.
Like I think in North American, it allows you to select some of the things, but not here. I
Yeah,
think
yeah. But
everything is
if you
fine.
don't select the cover page, then it won't print that numbers. That's probably it.
I think the cover page is just your information. This first page, the first page which has your agent information. So if you,
Oh,
uh, where is that? Uh, I think there should be a page which has this one. I think it will not include agent information, I believe. Okay, any other question?
Yeah, Anuj, one question. So and I might have missed it. The lump sum is tax free. Is well, the death benefit is tax free, but the lump sum is also tax free when it takes for any kind of
Your
critical illness.
voice was a little shaky, but if I understand correctly, you're asking about the tax, right? So,
Yeah.
yeah, so all the benefits from term policies or any policy per se, it is going to be tax free. The death benefit also and the lump sum benefit also.
Okay. Thank you. That's all.
Yeah, so Venkat, when you remove the cover page, it does not print this page, which has the agent information. I just tried it. Okay, good. And who else? Or do you see any value by adding or by sharing this thing? And next time when you talk, can you duplicate this thing, practice it, and now do you feel the need that everyone should have a plan like this? Is Chintan on the call? Taral or Chintan? No, I think they are not. So
Anuj bhai, I
I'll
got this plan yesterday from Manish bhai.
awesome, Mehul.
Yes, thank you.
Now I'll share one quick experience that like why yesterday I felt very sad and like one of the client that one of our partner approached 2 months ago, young person, 37-year-old, young family, little kid, and let me stop sharing first or stop recording. So we were talking and we were presenting the policies and term and all, and he was like,
Still,
yeah, I'll
I
do
think
it.
Anuj,
Yeah,
this was still in recording mode, I think.
still, I don't know. Let's see. I'm just.